Hello traders, and thank you for joining me in today's webinar. It's the beginning of a new trading week. Today is Monday, the 23rd of September, 2024. We have had a brilliant week last week. If in terms of brilliant, I mean we had great moves, especially on gold, especially also as well on the dollar index. It was a tough week, as we agreed during the last week's webinar. We had a lot of data coming in. We had some central bank meetings, and we also had the federal meeting, which was, to me, a bit of a surprise what happened in this meeting, basically. So yeah, today let's have a look on the markets. What do we expect? And before diving into what I do personally expect during the next week, let's have a quick brief on what actually happened during the last week. So I'll give you a brief hint about the central bank's meetings, their results, and what could this basically mean for the market. So yeah, let's start with the Federal Reserve interest rate decision. So basically, markets were a little bit split between a 50 basis points interest rate cut or a 25 basis points interest rate cut. So markets were basically somehow expecting both, with a higher probability of a 50 basis points interest rate cut. Personally, I saw a 25 move only. However, the Federal Reserve decided to be a little bit aggressive, and we had the first interest rate cut since many years, I think since 2020, and the interest rate cut was for 50 basis points. So what does this mean for markets? Basically, the Federal Reserve somehow is very happy with how the economy is evolving. So Jerome Powell, in the press conference, he mentioned clearly to answering questions from the reporters that the economy is doing well. We have been, the economy is expanding. Inflation is very well, declining back to the target for the Federal Reserve, which is 2%, although not there yet. However, even the FOMC statement mentioned that they have greater confidence that inflation will be coming down to the target. Even the labor market indicators, the unemployment, the NFB, and everything that's been causing a little bit of extra volatility to the markets during the last maybe 1 or 2 months. Jerome Powell mentioned clearly that even if the unemployment numbers are going higher a little bit, currently we're talking about 4.3%, it's still well within the normal range, or the normal uptick after many months, 14 months of having the interest rates around the terminal rate of 5.5%. So he basically calmed the markets in a very good manner, and mentioned that the economy is good. There is nothing we need to worry about, like the recession. He didn't basically mention recession, but he mentioned in the press conference the word downturn. So even the word downturn, instead of using the word recession, gave some confidence to the markets that everything should be really good in the economy going forward. And that's why we have had, the meeting was on Wednesday. On Thursday, we had really brilliant moves in the US stock markets, because investors are somehow confident that maybe the US economy will not face a recession or a hard recession after, or maybe we will be finding this soft landing after the tightening cycle. So interest rate got 50 basis points, gold new all-time high. Yeah, basically because when the interest rate is cut, the dollar is weak, which gives a little bit push to gold. And don't forget what happened in the Middle East, especially to our brothers in Lebanon, and the heightened geopolitical tensions. And that's why gold is not finding any resistance. Maybe we will find resistance today, but we will talk about this when we come to the technical analysis. So that's what happened basically in the Federal Reserve interest rate decision. And we also had the Bank of England. And quickly, what happened in the Bank of England meeting? Pretty much nothing. They fixed interest rates around the same levels of 5%, with a split vote of 8-1. So only one member voted in favor of another rate cut, which didn't happen, which means that the Bank of England might be basically following the fact of quarterly interest rate cuts. So every quarter, which has 2 meetings from any central bank, maybe they will be cutting in one meeting, fixing in the other. which is exactly what is expected also from the Federal Reserve. Because if you look at the dot chart from the Federal Reserve, you will see that during the next year, with 8 meetings, they only expect that the interest rate will be cut around 100 basis points. So 100 basis points on 8 meetings, this means that one meeting they will fix interest rates, the following will be an interest rate cut of 25 basis points. I know it's still expectations, but this is what they actually gave to the markets. So that's for the Federal Reserve and that's for the Bank of England. And the Bank of Japan as well, fixed interest rates around the same levels of 0.25%. And the statement clearly mentioned that even if they are looking for further interest rate hikes, they need to make sure first that markets will be stable before doing so. Because we all remember what happened in August, by the beginning of August, when the Bank of Japan hiked interest rates by 15 basis points. We have seen, this carry trade unwinding, in the markets, and we have had, terrible moves in all of the stock markets globally. So that's for now. Bank of England and Bank of Japan, nothing new, kept interest rates around the same levels, and the Federal Reserve cut interest rates by 50 basis points. That was quickly what most of, the important things that happened during the last week. And now let's have a look on what's going to happen during this week on the economic agenda. So starting by today, Monday, the 23rd of September, we have had terrible numbers coming out from the Eurozone. So it's just to start the week, the Euro is losing at the moment around maybe 70 pips in 2 hours, 1 hour, almost 1 hour and a half. And we are down 70 pips on the Euro just because of those numbers, really bad numbers coming out from the Eurozone. And it's all about the PMI, Purchasing Managers Index. When it comes to the German numbers, when it comes to the Euro numbers, everything is just below the previous number and even below the expectations, which is not something really good about the European economy. So during the week, during just the beginning of the week, the Euro is under really some pressure here. Even the pound, everything at the moment, as I can see in markets, everything is going down. So the Euro, the pound, only I can see, even gold is going down a little bit at the moment. Only I can see that the dollar is trying to hold its ground at the moment. Why is that? Because we have demand levels, if you remember them. We'll be talking about this shortly in the technical analysis. So moving forward today, what do we have? We have the PMI numbers from the Great Britain or the British economy. No any expectations for the composite PMI. When it comes to the manufacturing and the services, a little bit lower than the previous numbers for both. So when it comes to the services and the manufacturing PMI, they are both expected to come a little bit lower than the previous reading. And we have a comment from the FOMC member Bostic. Okay, I'll tell you what. The blackout period ended on Thursday. What's the blackout period? The blackout period is before the federal meeting or the FOMC meeting and after the meeting. It's a defined period of time where FOMC members are not allowed to speak or to give comments or to do any media, or press releases or anything. So during this blackout period, you will find no any comments from any FOMC members. However, after the blackout period ends, we are basically back to looking at or hearing the speeches from the FOMC members again. So today we will start with member Bostic, and Kashkari as well will be having a speech today. And we also will be looking at the very, very important PMI numbers from the US economy. So we have the manufacturing and we have the composites, and everything here is really, really important today. And to be honest with you, this week shouldn't be really tough like the previous week. We will somehow not be really concentrating on the economic agenda. However, I still really expect higher volatility during this week because the previous week was a lot to digest. with the FOMC meeting, with the Bank of Japan, Bank of England, and everything that we have just explained. Markets will be digesting those numbers or those, results from the economic agenda from the past week, maybe during this week. So expect higher volatility than usual. We are still starting the weekend. As I'm telling you, the euro is now down around 80 pips. The dollar is up about 40 pips. So yeah, higher volatility than usual is what you should expect during today's trading or this week's trading. Okay, moving forward to Tuesday, 24th of September. What do we have here? Comments from ECB member McCowell, FOMC member Bowman. Bowman is really important to listen to. Michelle Bowman was the only member in the FOMC committee to disagree on what actually was decided upon during the last meeting. So for the last 17 meetings by the FOMC, they always issue their decision unanimously, which means that the 12 members in the committee, they take the same decision. It's a unanimous decision during the 17 last meetings. However, during last week's meeting, it wasn't a unanimous decision. Michelle Bowman was basically, she didn't agree to cutting interest rates by 50 basis points. She favored at 25 basis points. So comments from Michelle Bowman specifically will have more impact on the markets at the moment because she's currently on the opposite side of FOMC, okay? She's not 100% agreeing with the previous decision, and maybe she will have a lot more to explain to markets during her speeches. So this is really important to listen to. We also have the CB consumer confidence tomorrow, which is a little bit important, slightly higher than the previous reading is what our markets are expecting. Moving forward to Wednesday, the 25th of September, non-monetary policy, the core CPI from the Bank of Japan. It's really important because CPI or inflation in Japan is what's moving somehow the Bank of Japan whether to hike interest rates again or not. So markets will definitely be looking at the core CPI from the Japanese economy on a year-over-year basis, and it's showing around 1.8%, which is exactly like the previous reading. Building permits from the US, McCowell speaks again from the ECB, some home sales data coming out from the US, crude oil inventories. Yeah, so Wednesday we have a couple of things to look at, not that really important, but again, as I said, during this whole week, expect that volatility will be higher than usual. Moving forward to Thursday, many comments from the ECB, Elderson and McCowell. We also have the economic bulletin from the European Central Bank, the jobless data or the jobless claims, the continuing and the initial. We have GDP. Oh, that's a tough day. Thursday is really important. Look at that. We have the insurance claims. We have the durable goods orders. And we have the core PCE prices, which means that PCE will be on Friday. We'll come to that later, okay? And we also have the GDP. Another comment from Bowman. A comment or a speech from Jerome Powell. Williams. Okay, that's a tough day. Maybe so far that's, the most important day on the economic agenda, which is Thursday. So this is definitely something to look at and to expect higher volatility during that day. We also have Christine Lagarde, ECB President, Dick Wendus, who's the Vice President for the ECB, Barr, Janet Yellen, Treasury Secretary, and also Kashkari. So many comments, a lot of comments from the ECB and the FOMC. We also have the core durable goods orders, we have the GDP, and we have the insurance claims or the jobless insurance claims. Okay, Friday the 27th. we will be having the PCE, Personal Consumption Expenditures, which is for the Federal Reserve the main measure of inflation during this period. It's definitely something. So yeah, let's say Thursday and Friday are the two most important days of the week. So maybe we will be starting the week with higher than usual volatility, as I said, because this is something that we will be expecting throughout the week, but even more higher volatility to end the week on Thursday and Friday with the really, really important PCE data, inflation data coming out from the US markets. And of course, we will be having the commitment of traders positions, which is something that's usually always announced on Friday. Okay, so that's for the economic agenda. Maybe you can have a couple of questions here if you want. If there are two pieces of news, for example, good NFP results and hourly average earnings. If there are two pieces of news, for example, good NFP and hourly average earnings having bad results, does it affect the markets? It definitely affects the markets, but it depends on which is more extreme. I mean, if you're saying in this scenario, if the NFP is good, I'm not sure what do you mean by bad results on the average hourly earnings. Is it higher or lower? Because markets at the moment would like to see the NFP going down a little bit, not too much, and as well as the wages or the average hourly earnings going down a little bit, because it's an inflationary, pressure on the economy. If the wages are still high, this means that, people can still make good money, and this somehow affects, the inflation. It's called as an inflationary pressure. So I'm not really sure what do you mean by good NFP and bad hourly earnings. But if you mean that two indicators are, not on the same side, like one is bullish and one is bearish, whatever that means, markets will concentrate with what's more to the extreme, which one of them is really unexpected by markets, far away from expectations. I hope you get my point. Do we have any other questions? Let me check. I think we are good. I'm from Indonesia. Nice to meet you all. Thank you. Good evening. Good evening. Oh, good evening we have. Okay. Good morning, Assam. Good morning, everyone. Okay. What indicator do you use to assess momentum? This is an indicator that's called the squeeze momentum. And I'm not sure when, but I've decided when to do this webinar for the squeeze momentum. Let me check. When is it? Let me check my calendar. 11th of October, is it? Yeah, 11th of October. So not this Friday. The next Friday will be the 27th. The following one will be the 4th of October. Of course, I'll not do a webinar on the 4th of October because this means that it will be the first Friday in October, sorry. So we'll be having NFP data. So the second Friday in October, this will be the 11th of October, and I'll be explaining this momentum indicator in all of the details that you would need. So wait for an email with a link to register for this webinar. I think maybe during the next week or something that you will be getting this email to sign up for my webinar about the squeeze momentum indicator, okay? And yeah, by the way, if you're talking about the squeeze momentum indicator, this is a demand zone that we have previously spoke about on the dollar, which is around the 100.50, right? Why did I say that this demand zone is something that we should really expect on the dollar index? Because if you see here, the dollar is basically moving sideways, right? So this low is just around equal to the previous low. It's a sideways range. However, when you look at the squeeze momentum or any momentum indicator, and you will see that this low, is higher than the previous low. So momentum is basically not able to follow price. Price is having, an equal low, and momentum is showing. This is what we call as a bullish divergence. If you don't really understand the bullish divergence, don't worry. Just sign up for the webinar on the momentum. However, what I mean is, when you find differences in the behavior of price and behavior of the momentum, you know that something here is wrong. And this can tell you a lot about whether the demand zone will be respected or broken. In this case, we have had, a lot of volatility around those levels. Why is that? Because it was a FOMC meeting, okay? So we tried to break below. We tried even to respect those levels, went as high as 101.50. But at the end, after, all of the volatility from the news fade out, technical analysis will basically so on the dollar index here, let's try to know what we're gonna do during this week. On the weekly time frame, basically nothing, because we are just near demand zone or part of a support here. The weekly time frame is really moving higher so far. On the daily, I'm a little bit bullish, because on Friday, that was basically, an indecision candle around the support level. On the daily time frame, we already have a new higher high and a new lower or higher low. So I'm basically bullish on the dollar so far. Let's say that during the week, I'll be looking to target the levels of 101.80, 101.80 on the dollar. Of course, breaking those levels will mean a continued move, maybe up to 103. Will this happen or not? I don't really know, because we have a lot of data. But what I'm trying to give you is a scenario. Right now, I'm bullish on the dollar. Where to? To 101.80. A break above will mean a continued move. But, failing to break those levels will continue the move sideways. So the make or break level on the dollar index during the week should be the 101.80. This is your trading limit, or trading, let's say, range, between 101.80 and 100.50. Breaking support is bearish. You will just, sell the dollar. Breaking through resistance, you will buy the dollar. And this is just really, really simple analysis. Nothing more needs to be said. How to do a good analysis? Try to know what strategy you're using, or because something that a lot of beginners, fail to do is to plan. If I'm planning, if I'm having, I want to formulate a trading strategy. How should this trading strategy be? What should I look for? Whether I'll be using supply and demand, whether I'll be using trend lines, supports and resistances, ICT, SMC, whatever it is. Learn one thing about the markets, and then learn everything about this one thing. And you will just need to choose your time frames, and by practice, you will do some good analysis. It just needs practice and needs some sort of a plan. What I'm here to do right now. So personally, for me, if I'm doing this weekly analysis webinar, I need to know the key levels of interest. Where's the nearest support? Where's the nearest resistance? And during the week, if this happened, I'll be doing this. If this didn't happen, I'll be doing this, and so on. This is just, getting a clear plan. There is a saying that says, plan your trades and trade your plans. So I'm planning right now, as I said, maybe I'll be buying the dollar to 101.80. I will cover my positions here. If we break higher than 101.80, I will buy again. If we reject those levels, I'll be selling back to the levels of support. If we break support 100.50, I will continue selling. This is, I'm planning where should the price go. And this is really simple because it's just support and resistance, nothing more. Now that the Fed has cut interest rates by more than what the market was expecting, will not that trigger a recession? That's a very, very good question. And it won't. Why? Because Jerome Powell, I get your point. Markets were somehow expecting maybe 25 basis points. If the Federal Reserve suddenly decided to cut interest rates by 50 basis points, this somehow could have started some recession fears in the markets, because people might say, okay, does the Federal Reserve know something that we shouldn't, or we don't know? Why is the Federal Reserve suddenly trying to push the economy by cutting interest rates 50 basis points on one piece? So this could have started some recession fears in the markets. However, I believe that Jerome Powell, through his speech and through his brilliant choice of words, he gave the markets no reason to be afraid. If you go back and see the press conference by Jerome Powell, he spoke for about 1 hour. And he ended 1 hour long speech by saying that the US economy is good and we don't see any signs of a downturn in the economy. That was literally his last sentence before saying goodbye to everyone and going back. So how he passed the 50 basis points interest rate cut to the markets, I believe is what didn't cause any recession fears. He spoke about inflation, that we have greater confidence that the inflation is going back to the target. He spoke about the unemployment numbers and the labor market numbers specifically. He spoke about the insurance claims. He spoke about the unemployment rate. He literally answered every question, that there is nothing you need to worry about. And that's why markets so far basically have no any recession fears. And meeting concluded on Wednesday. Thursday, you see, the stock indices going to almost all-time highs. So that's a good question. And for now, we don't basically have any fears of recession in the markets, okay? What factors could significantly influence the core PCE inflation rate in the next few years? My friend, the Federal Reserve doesn't even know what he will do or what will it do in the next meeting. So you're asking me about the core PCE in the next few years. I'm not sure this is something I can personally expect. Okay, especially that we have a lot going on when it comes to the geopolitics. You have Russia and Ukraine here, you have the Middle East and what's going on there. So of course, it's a lot to be trying to expect on a few years, time scale. When it comes to the euro, as clear as day, we have supply zone around here. Tapped into the supply, rejected. Where are we going on the euro? We are going to the key support. So just like the dollar index, we are trading in a sideways range. The main support that I have is 1.1010, let's say. So it's 1.1010. And the resistance should be around 1.12. Just around here. That's the sideways range that I'm having. At the moment, the euro, where is it going? It's going back to the 1.1010. You say it. What if we break below the support? What do you think will happen? Definitely nothing. We will just, tap into the next support around the 1.0890. Simple. What if we reject the support? It's a good buy back to the resistance because it's a sideways range. What if we break higher or break through the resistance? Continue buying, till whatever we have on the daily time frame. Maybe 1.1270. So we don't have a lot, to discuss about technicals when it comes to the dollar and the euro. Things maybe will become a little bit challenging when we go to look at gold. But at the moment, the dollar and the euro is just moving sideways. Yes, I think euro will drop 100 pips. Yeah, I think because technically we are in a sideways range. We just, tapped into supply zone. Fundamentally, we have had, we are just starting the week and we have had very bad numbers coming out from the euro economy. So I think, yeah, we will continue a little bit downwards. And yes, because the dollar will rise up a little bit. For you, I'm waiting for a question, but so far I haven't had this question. Why is the dollar moving up while the Federal Reserve just cut interest rates by 50 basis points? Can anyone tell me? So the Federal Reserve cut interest rates, right, by 50 basis points. Cutting interest rates on the dollar? Why are people buying dollar today? Does anyone know? What factors are likely to influence the fluctuations in global gold prices in the coming weeks? Geopolitics, 100% geopolitics. And we'll discuss more when we check the gold chart. Okay, seems no one is answering the question. The dollar is moving higher, even though the Federal Reserve. All right, I'm seeing some strong dollar strength momentum, so I can see, I believe that. Thank you, sir. Okay, the reason the dollar is edging higher today, and we didn't basically break the support, although the Federal Reserve cut interest rates on the US dollar, is that because markets were already, expecting an interest rate cut. Look at the dollar. It's already going down for a long time. Let's say from here, 106. Since April, right? So since April, the dollar is moving down. Why? Because we know that the Federal Reserve will cut interest rates in September. When actually the Federal Reserve cut interest rates, maybe some people who shorted here or here, expecting that the Federal Reserve will cut interest rates now that it's been delivered, will say, okay, maybe we should cover our short positions. And covering short positions means that buying back, which might give you some retracement. We always say, buy the rumor, sell the fact. In this case, sell the rumor, buy the fact. It's done. We were expecting something, so we traded early on those expectations. Now that it's been delivered, it's time to cover some positions. I hope you get that. Do you think gold has already peaked? I hope. Let's have a look on gold. And yes, it should. It should. Maybe around. I mean, look, technically, I would really love to see some retracement. Okay. Because I'll tell you something. Prices must retrace. And prices, in order to move up in a healthy, sustainable trend, it must move with a moderate angle. What do you mean? Let's have a look on the trend angle here. And let's say, let me give you another example on US oil, let's say, or indices. Okay, so this is the Dow Jones. On some platforms like TradingView, you will see a tool called trend angle, which will tell you this upward move is with an angle of how much? So this upward move is a 10-degree angle, okay? This whole thing. Is it strong enough? It's not. Let's see. This is a healthy upward trend. Where is it? Where is it? 27 degrees. It's not a lot, and it's not like 10 degrees. So this is a healthy upward trend because this is the S&P. However, when you look at gold on a short time frame, 30, and even the last move. Let's see this one. 56-degree move. It's a lot. Markets cannot just move. It's almost moving, you know, in a vertical manner. It cannot do this. So we will have to retrace and maybe start moving again higher. So the angle will change. It will be, you know, something a little bit more sustainable, like 30, 25 degrees. This is what I'm saying. Markets cannot just move in a vertical manner. And if it did for a long time, went up vertically, it will go down again vertically, which is a V reversal. So I think this is a little bit too advanced, but what I'm trying to say is, yeah, technically, I'm expecting gold to move lower. Because guess what? All of this upward move is not reflecting on the momentum. Is not. Momentum is not able to follow this upward move. And now, on the 1 hour time frame, you can see what's happening. We broke the last low, which was a condition for me to short gold during the last week, and it never happened. It's happening right now. So we are moving higher in an upward trend, higher highs and higher lows. What's happening here? A lower low. So yes, I think it should move lower. I think it should move lower, and yeah, I think we got the target already. Yep, almost the target of this, let's say, flag pattern, or this pennant, I mean. So a move higher, correction, exactly the same upward move. 8 hour time frame so far is engulfing. So yes, gold is moving down. Gold is moving down. Where to? Let's see some Fibonacci retracements. Gold is moving at least to the 50% retracement, 50% Fibonacci, which is $25.88 per ounce. Might be wrong, but I believe this will happen. Yeah. Yes. Are you gonna short gold because of the COC, change of character? Yes. When is the right time to sell gold? Depending on your strategy, but depending on mine, I might wait for a slight upward retest before shorting. Because I'll tell you what, on the 1 hour time frame, I cannot short here because, you know, those are two full candles, you know, around $14, 140 pips. If I want to short here, technically I could, maybe from here, but the stops should be above the previous high. And if I'm going to break even my trade at the 38.20%, it's not even giving me 1-to-1 risk to reward ratio. So in this case, what I would do is maybe I would wait for something like a head and shoulders pattern to form. I mean, any upward move, which should be a retracement of what's happening here. You see this downward move, which is just, you know, starting now with the London session. So the London session pushed gold lower. Most of the liquidity, which is by the beginning of the session, should fade out by now. So we might, from now till the US session, edge higher a little bit to form a lower high, because we formed already a lower low, right? This is a lower low. I'm looking for a lower high around here, and I'll maybe short. In this case, I'll not be shorting from here. Maybe I'll short a little bit higher from here. Look at the risk to reward ratio. It's now 1.75. My target didn't change, but I have chosen or I have waited for a better entry, right? In this case, if I short here, 1.275 risk to reward ratio, my stop loss is around the same level. Once prices move lower to the 38.20%, I will secure my position and increase my target to the 50%. This is something I would personally do based on my preference, my risk profile, and my strategy. And that's it. What happens if you see this low that we have just formed? So this is a bearish candle, right? We are really talking about intraday trades right now. I know this is a weekly analysis session, but if you're talking about trading, this is a bearish candle, a high and a low. This is a lower high and a lower low, right? You can treat candles as a trend. So this is low and so on. Right now, we still have a lower high. What if this candle broke the previous low and continued moving lower? Some of people that I know, and I used to do this, will short here, expecting another bearish candle immediately without retracing. You know, it's still a possible scenario, but it's risky. It's really risky. So this trade scenario, if I want to do it like an intraday position, I will wait for a break below this low, enter immediately. The stops will be above this candle high. Let's say it's still around here, and the target will be at least maybe around the same level. So it's a good risk to reward ratio, but it's risky. It is risky. So it depends on your strategy. That's what I'm trying to say. Gold will drop 26.10. It's already near. I'm looking for something more. I'm looking for 25.88. Okay. Looks like gold is creating lower low, and if it closes below the current low, it will clearly show as Quasimodo sell. Okay, yeah, I definitely agree. It's going lower, and hopefully it does, because we are seeing the dollar, you know, edging higher. We are seeing the euro edging lower. So yeah, the euro might be good for today as for trading, because we will definitely respect this level. You see this? It was a downward move. I'm talking about the euro dollar right now. I don't want you to you know, get confused. This is a move lower on the euro. This is an indecisive candle, and this is a huge upward move. You know, if you know anything about supply and demand, you will definitely know that this is supply. It's demand. So this is a demand level. We will definitely respect this level here. And guess what? We are already respecting. See what happened when we touched into this zone. Literally touched. Right now. This is, guys, happening right now. So I missed the entry by like 10 pips. Maybe if I caught this, the position would be a long position from here. If you actually sold or watched, you know, joined us in the supply and demand webinar, you will know what I'm talking about, and you will know why I'm entering from here. So the stop loss should be below the supply. It's a decent risk to reward, let's say, if we tap into this, but it's a little bit late. I would personally wait for this upward move, and again, you know, short the euro, because overall on the weekly analysis, I'm bearish euro. So yeah, literally during today's sessions, we might see an upward little bit retracement on the euro and gold, but you know, upward moves, personally to me, to be shorted. Okay, let's have a look on the indices. Unfortunately, due to what happened and the Federal Reserve, I got stopped out on my position on the Nasdaq. Remember what we talked about, or what we said about some supply levels here, So I shorted NASDAQ and I was waiting, for some downward move before FOMIC. We rejected the supply, moved lower a little bit. So I was, somehow in profits, but it didn't really move lower before the FOMIC, and we moved higher again. So nothing to be said here except that there will definitely be a good trade on the NASDAQ this week. Why? I'll tell you why. See this resistance? We didn't reject, we rejected the resistance, but we created support here, right? So right now, if you just zoom in, you will see this is the latest support around here. This is the latest resistance around here. And this resistance is another old resistance. So we are consolidating near a major resistance. If we broke below support, I will definitely short again to 19,360, because breaking below support will definitely mean that we rejected this old resistance with higher confirmation, because we didn't only just reject, we rejected, consolidated around it a little bit, and then we broke into a new lower low. This will be a very good short to the levels of 19,360. On the other hand, if we consolidated here and broke above resistance, this means that we not only broke above this minor resistance, but we broke above this resistance. Personally, I don't see this happening. Why? Because momentum is not really cool here. Momentum is not able to follow price. Price is moving higher, momentum is edging lower, and this is how I would personally say this resistance will, hold during this week. So personally, I'll be waiting for the NASDAQ to break below the 19,750 for a short to this liquidity area here, 19,380. This is something I'll be expecting on the NASDAQ. Similarly, we might see something similar on the S&P, somehow similar, but here the consolidation is happening above all resistances. So if we broke below support, we will just be heading for a retest. Still a good retest around 45 pips. But I don't usually trade, S&P, but it's somehow similar. The Dow Jones is also the same. We are breaking, or we broke above resistance anyway. So we broke higher. Guess what? Momentum doesn't say that we will continue any longer. So this means that we might be breaking below support here to head for a retest again for the resistance that we just broke, and the momentum is not, strengthening. So I am slightly bearish US indices, at least for a retracement during this week. Sir, make a webinar about ICT and SMC. I would love to, but okay, I'll tell you something. When I do a webinar, for something I personally use and I've used for years, okay? So I've done the supply and demand webinar, let's say. If you access YouTube, you will find tons of content about supply and demand. But because I've used supply and demand for many, many years, I have noticed some things myself. So I can add something new to students or to people who will attend my supply and demand webinar because I'm using it. I've added some things. I've mixed supply and demand with momentum and so on. So here, this was, supply. We broke above supply, retested, but the momentum is not really great. So that's why I'm telling you, we might head back for a retest because I've used this for years. When it comes to ICT and SMC, I've definitely worked with it, but not long enough for me to teach you something new in this area. Got my point? I just don't want to tell you, if I'm gonna do it, I'll just explain to you exactly the content that's there out on the internet. I can do it, okay? But there won't be anything new for me to add in this area when it comes to ICT or SMC. And ICT, of course, it couldn't be explained in one webinar, not two, not even 10, because it has a lot of patterns. It should be a long course, and to be honest, I wouldn't really do so. Got my point? And to be honest, ICT traders will hate me right now, but ICT is good and it's profitable. And I know personally my friends, who have been profitable with ICT for a long time. But when it comes to me, I love to keep my analysis simple. I don't like to, tell you names like fair value gap or liquidity or I just, price is moving higher, moving lower. Thank you very much. We are done. So because technical analysis shouldn't be really so complicated. And that's why I hated elite wave analysis while I've been, doing elite waves for some time. But it takes a lot of time. And at the end, you have a big chart with a lot of numbers and a lot of characters. And then you can say, okay, after all of this, we might go higher or we might go lower. God, no, I wouldn't do this. Because anyway, prices would go higher or go lower. But I love to keep analysis as simple as possible. Where are the areas of interest? This is a resistance. We broke higher, right? It's clear. It was resistance here, broke higher. Momentum is not so good. Thank you very much. We might head for a retracement. This is just as simple as that. So do we have any questions left? I think I'm done here. Please let me know if there are any questions before I end this session. How about AI analysis tools? They could save time. Like, what do you mean exactly by AI analysis tools? Which analysis tools exactly? Do you mean like expert advisors? Do you mean like pattern recognition systems? There are a lot. And I don't. Anyway, whatever your answer is, no, I don't. Indicator, not AI. Okay, the question was from Isam, but someone else. I don't understand you guys. I'm sorry. Can you write the question one more time? But anyway, no. The ones that send signals, no, of course not. I don't trust it. I will not, because it's really objective. Okay, so it has some rules like moving averages, RSIs, and so on. So it's a set of objective rules. If this happens, push a signal buy. If this happens, push a signal sell. But it doesn't really, care about liquidity, doesn't really care about fundamentals, and so on. Do you have copy trading, sir? No, I don't. At the moment, because I represent a regulated company, I'm not allowed to do so. Maybe one day. I wish you'd have a physical session. Where? I mean, I'm based in Dubai. Where would you like to meet, to the session to be? Maybe we could arrange something. Okay, I think we are done here. Thank you very, very much for tuning in to this session. And yeah, I will meet you again next week. This week should be a little bit, more relaxed. There are some technical good scenarios that we will be trading. Wait for the supports and resistances that we mentioned to be broken before taking action. Now, we have set some sort of a trading plan for the week. We know the dollar, we know the euro, we have looked at the indices, we have identified some areas of interest, whether supply and demand or simple supports and resistances. Wait for those plans, or wait for price to come to you and then follow your plan. and trade your plan. Don't follow price, or don't, just run after price. What about that follow-up session you mentioned? No one sent me an email, maybe a few, but I said to you, if you want this, send me an email. I need to make sure that, we have some people interested so we can start doing this. So this is my email. If you want me to do a weekly follow-up analysis session, so this is our weekly analysis session, which is on Monday. I was thinking about doing a follow-up session on maybe Wednesday. Either to, if prices moved in our, direction, the weekly direction, we'll just confirm everything. If we have actually trades live, I'll tell you, okay, now this is my trade, this is my live positions. So this would be a follow-up. If prices moved away from our direction, which is something that could happen, I will update you with, what I now see in the markets. So if you want this follow-up session to be on Wednesday, please send me an email, tell me, I want this follow-up session, and I'll make sure that I'll start doing this as soon as possible. Okay. Thank you very much, guys, for tuning into this session. I'll see you next week, and I hope when I see you, you'll still have balance remaining in your account. Don't increase your risk. Please please use your stop loss and trade safe. Thank you and goodbye.